welcome to the show.
I'm surprised he's looking at emails.
Yeah. I got a great team in place, right? So I appreciate you guys. Thanks for having me here. Excited to be here with you.
And not only is it my business email, but you're also coming in on my personal email as well. So your team researched
omnipresent.
Well, apparently.
I told my marketing team yesterday, I say, I want to be omnipresent. I want everywhere everybody looks, they see us. And no, it's well, thanks for not unsubscribing. So I appreciate that. First of all. And we actually try not to send too many emails, but we do about 2 a week. And we try to add some value, and at the same time, let people know we're buying, we're selling, we're joint venturing, we're raising money, we're doing all these different kinds of things. We do some coaching and stuff too, obviously. So, I think I think it's important for people to know that there's better returns, as you guys know, in real estate, backed by hard assets, tangible. You got, especially if it's an equity investment, it's there's depreciation and all sorts of other stuff that can benefit them that they can't get in, the stock market and other traditional type of investment.
Tell us a little bit about what you do and how you got started in this business, kind of just a precursor to our incredible conversation that's about to happen.
Yeah, I mean, high level is I was going through college 03 to 07. So the market was going crazy. Everybody's making money in real estate. And that was what motivated me back then. So I graduated from college in 07, moved out to New York City. I'm from Cleveland, Ohio originally. I live in Charleston, South Carolina, not far from you guys now.
Neighbors.
And I thought you got involved in real estate by becoming a real estate agent. So I got my real estate license. I started brokering actually commercial retail leases and office leases, and just saw how much money there was on the investment side versus on the ownership side versus the brokering side. So I ended up saying I want to become an investor, and I moved down to Charleston, South Carolina. Just wanted some better weather, and got all excited and was ready to invest, and the market collapsed like in late 2008. And I was like, where's everybody going? Run from real estate. And I was like, I just showed up. And so, I just, I was kind of fortunate because market, the prices had dropped. Everything was bottom of the, very different than today, like essentially opposite, right? Like there's a lot of capital out there, but there's not a lot of low hanging fruit type of deals, right? And back 10, 12 years ago, there were deals everywhere, right? You couldn't walk down the street without walking past 3 foreclosed houses, bank-owned homes, selling for pennies on the dollar, but money was nowhere. And I learned very quickly, and after seeing multiple market cycles over the past 12 plus years that I've been investing, you got to be always sourcing capital and always sourcing deals all the time. And so that's, we're focusing on those revenue generating activities. And when I had that awareness, I started meeting people with money, started pairing that up with deals and getting involved somehow. Sometimes I'd lend or I'd borrow money as more of a debt loan, and then other times as like an equity joint venture type partnership, and built up a portfolio. There's a lot of highs and lows and stuff. I can go into the story if you want to, but essentially fast forward to today, I have a portfolio of, I was up to 4,800 doors. I just sold off about 800 of like the smaller properties and some more like the C-class type properties. So I'm at about 4,000 doors right now, but I've transacted many thousands more than that. But my portfolio is a little over $400 million as I sit here today with you.
Wow, that's amazing.
Now, is the majority of that portfolio in the multifamily arena?
Yep, 90% of it's multifamily. I got about 10% of miscellaneous, some office, like small micro office type stuff. I have some storage facilities. I have some vacation rentals and kind of like unique short-term rental type stuff. But yeah, 90% of it's multifamily. And usually in secondary, tertiary type markets. I don't do anything luxury, and I don't do anything that's in war zones. So I stick to that kind of B class, blue collar, workforce housing, rents average.
Housing.
What's that?
Affordable housing.
Affordable, right? Not low end, not like low income housing, but affordable housing for the workforce. Probably rents that range from low end $600 up to about $1,500 a month. So we probably average $800 to $1,000 a month in rent. So right in the middle of the road. I think it's very insulated. When the market's good, everybody can afford that. When the market shifts, a lot of those luxury renters move into more of a workforce. So it stays pretty occupied.